Hello guys, so this video is all about showing you the limitations of our setup, so that when we know the limitations and the problems in our setup, so that we can perform much more awesome. So first of all, I will quickly tell what are the things that you need to remember while you're taking the trade. So whenever you are about to enter into a trade, what is the first thing that you check for? You check for, first of all, you check what is the trend. Okay, so I would suggest do the homework before itself. So that's the reason why I told, for example, you have a stock today in your news, you can have that stock for tomorrow also if you see that the prices are very well respected by the WMA. So if you are like having your WMA trend, how the prices are reacting to the WMA is very important. If you can have that watched in your watch list, let's say this is your Bollinger, then you can definitely have those stock again for the next day. What is the problem in trading in that same stock? You can definitely have that. Okay, but you have to first of all see what is the trend of the WMA and how it is reacting to WMA, and second, what we focus on is we check whether it is having some good volume on an overall basis, and then what we check, we give importance to our, while you're trading, you focus on the Bollingers. So this lower Bollinger Band, if it is touching, then only we focus on dynamic patterns, and upper Bollinger Band is a place for reversals provided WMA is cutting and it's touching the upper Bollinger Band. Okay, inside places are places for continuation patterns. Okay, so for example, if you are having a WMA like this, sorry, if you're having a Bollingers like this and having your, okay, and you're having a first cut over here, now we will be looking only for a buy opportunity. Okay, now you see your candle is actually going up, but you don't take that trade. If you want to take that trade, you expect the prices to come down and take support at the inside of the Bollinger Band, then you take. So when do you take? When the trend is cutting the upper Bollinger Band, you don't take, wait for it to reverse and come inside the Bollinger Band, and this is known as a pullback. So inside Bollinger Band is a place for a continuation pattern, a pattern where the trend is continuing. Okay, so we have to remember these things, and we check the RSIs. We will check the RSI, because RSI gives you the strength of the instrument, providing you the buy and selling zones. So it should be visibly above 50. When I say visibly above 50, it's not struggling 51, 52, after that it's going down. It's visibly above 50, so that you don't have any space of doubt whether it's a buy trade or sell trade. You have a crystal clear information that it's in a buying zone. Okay, its strength is pulling towards the bullish bias. So with that in mind, let's go to the first issue. So catching the trend late. So catching the trend late is when you're actually your prices, for example, you're opening Sun Pharma at 10 o'clock, you had a cut of Sun Pharma in the WMA and the stock is keeping on falling, and around 1 p.m. you're getting another pullback and you're cutting the WMA again, the second opportunity. I don't recommend you to take that particular trade, because that is a place for scaling up positions or a pullback which has already given up the move. Then now it's a time to add in and ride the journey. Adding positions to a winning trade is something we talk about in our 2 months mentorship program. So catching the trend late is not a good thing to do. So for example, let me see if you have any opportunity. So for example, consider this as a single chart. You had your first opportunity here, which is a good opportunity, and you are getting a second opportunity here. Okay, so this is, even though it's wonderful and gave a move, So provided if it's getting closer to the market end, it's not a good trade to take. So the idea is, if this is your first opportunity for the day and you're getting a second opportunity somewhere over here or here, the market is about to close, don't take that trade, because one thing, the time is less, and then the next thing is you will not get the exact move which you had if you would have entered in the first attempt. So immediate reversals in dynamic. Always remember, in dynamic patterns, the dynamic patterns, two things that you need to remember: it occurs only in the upper or lower Bollinger Band. Okay. Upper or lower Bollinger Band is the only place for a reversal. So if you have your prices being rising and cutting, what you expect, it's touching the upper Bollinger Band, and immediate next candle should be closing below the trend line. This is your dynamic perfect pattern. So sometimes I had personally seen issues when your trend is falling. Okay, you have your WMA that is cutting, and it will give you, sometimes it will act as a minor resistance, but I would recommend do not take this trade. Why? Because it's inside the Bollinger Band, a high possibility there is still so much place move left for going into the overbought area. So what it will happen, it may execute buffer also, but then it will continue its pattern. Okay, so this is not a place that you can take for a dynamic patterns, and this is one issue we may face in taking a dynamic reversals patterns. Dynamic reversal pattern occurs only in the upper Bollinger Band or the lower Bollinger Band zone. Okay, overbought, oversold zone. The next is immediate reversals that we saw. Is next is continuation patterns. That what I talked is, it will happen in the inside of the Bollinger Band. Okay, so what is exactly the pullback is when sometimes it may be a very big candle whenever there is a breakout. So what you do, you don't worry about that, you wait for a support. What is a support? A support is when you have the prices taking a support at the WMA, and it's called a semicircle pattern. The prices are likely to go up. Okay, the bears were not able to take the price to the seller's territory. RSI zones I talked is like we have to make sure that the RSI is visibly above 50. Okay, visibly above 50 for a buying trade and visibly below 50 for a selling trade. So if you see this particular example, the market is ranging, that we will talk how do we avoid ranging markets. But if you see this, if you keep the RSI to 50, okay, when you keep it to the 50 zone, so okay, so see this particular area, this is a place, seemingly a good opportunity for you to short. It's touching the upper Bollinger Band, but what happens, the RSI is not below 50. Okay, RSI is not below 50. Even in ADX, it's showing the bullish bias is strong. Okay, so we will never take these kind of opportunities. We will make sure that visibly, if RSI is like this below 50, then only we will take a short opportunity, or else we will be looking for a buying trade. So handling pullbacks is the same thing that I talked, is when you have a price going up, and even if it's upper Bollinger Band, you don't take, you take only if it is taking support and your WMA is taking a consolidation. Okay, so this is how you have to handle a pullback trade. So you will take only a position only when the trade is touching the upper Bollinger Band and taking a support inside the Bollinger Band. Then you will go for a buying trade, because this is a continuation pattern. continuation pattern is when your price is going up, taking support and going up. So here you will not look for opportunity going short. Why? Because you know it's inside the Bollinger Band, not a place for a reversal. It's a place for a continuation. So ranging markets. So when I say about finding whether the market is ranging or trending, you can do all these tasks before the market open. I mean, if you have a particular list of stocks, you can go to higher time frame and see if the prices are in a range. So what is meant by range? When I say about in a range, I mean the prices are actually in a trending phase, or in the, see this Bajaj Finance is in a range. It's kind of market is going sideways. It's kind of choppy. The market is not in a trend. So these kind of stocks in a daily chart, if you see the prices are for a period of weeks, it's staying in a single area. It's not going anywhere. So this kind of markets is not safe for trading. But why I chose this stock, it's like to show you the markets. We can trade in ranging markets, but those are risky things. So when you have some stocks in your watch list, make sure that the stocks are visibly in a trend like this. Okay, so suppose like if you are having a stock like in this day, you know that the prices are moving up. So the prices are not staying within a place over a period of time. So also you can use your ADX to see if it's about 20, it's in a trending phase. So like there is no point of checking ADX in a 3 minutes or 5 minutes chart so to see whether it is trending. You can find, but you know it's highly changing. It's fastly and swiftly changing compared to the higher time frames. So in the hourly chart, ADX is actually in a ranging market. Okay, so you can trade, but you have to be a little more cautious. So ranging markets is a thing that we should avoid, and it's a limitation for our analysis. And the next thing, while trading in a shorter time frame, that is 3 minutes or 5 minutes, you see your Bollingers. If it is closed range, if it's actually having a very small range, then it's a ranging market. And also if it is in a flat trend, flat sideways movement, then it's actually a ranging markets. So your Bollingers should be either sloping upwards or going downwards. So these are the two things that you need to check in the ranging markets, because ranging markets is one of our biggest enemy. And the next thing is you see your prices. The prices reacting to the WMA. If it's cutting too much, like always an ideal case, best cases, it's going up, reversing, coming down. So if it's too much cuttings or closings that are happening and no execution is happening, avoid that particular stock. Okay, so lack of preparation is when you don't have spent time in analyzing 3 to 4 stocks and keeping it in your watch list. You can periodically change that, but for example, for me, like I will be having stocks like ICICI, Indigo. These are actually respecting the price movements of WMA. Have a list of stocks which are actually respecting the WMA over a period of time on a higher time frame to the lower time frame basis. If you're opening a 5-minute chart, you open the previous days and see how the prices reacted to the WMA and have those stocks in your watch list. There is no point of having everything in your watch list and just trading based on the stock selection process. Have a list of stocks that are actually reacting to the WMA. For example, if you have Sun Pharma in news today, keep it in your watch list and see how it respected, and after the market you can still keep it for the next day if it's reacting very well to the WMA for the next day also. So trending markets is a very important thing in respect to intraday trading. All these points you have to remember. Catching the trend lines, immediate reversals in dynamic is very important. Continuation happens inside of the Bollinger Band. RSI should be visibly outside or above 50 or below 50. Handling pullbacks, you have to make sure that it is taking support for a buy trade, and it's taking a resistance after a crossover, taking a resistance in a sell trade. Ranging markets you can find out using ADX, or you can go to higher time frames and see how the candles are reacting on a WMA, and you have to have a homework done every day to prepare a beautiful watch list. Even if you have 3 good stocks which are reacting, respecting the WMA, you can trade that every single day. I mean, you can have those stocks and periodically change that on a 2 to 3 day basis. So apart from that, if you have all these conditions, there is no point of failing in this market. As you know, the accuracy of WMA, you can expect if you do some homework and if you just trade based on the conditions, you will have a very good accuracy, and aim for larger risk rewards for every trade. Protect your profits. So for example, in choppy markets, when the prices go up, and you keep your stop loss, trial the stop loss to cost when it hits the target, so that there is no loss in that particular trade. Okay, and also in the big sessions or in the 2-month mentoring program, like I'm actually training on how do we win larger profits on different areas. We are focusing on that. We have just started over that, and you have to give importance to expecting a larger risk reward in every trade by trade basis. So thank you so much.